Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of New York and London coffee markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, New York coffee. In the recent past, this market has been subject to two separate head and shoulders patterns. The first was a small December 25 to January 26 head and shoulders top, a dark blue neckline extension above the market, currently at 286.40. The other was a more recent February to March reverse head and shoulder pattern for closer to the market, if still above, bright pink neckline extension, currently 280.35. We are just below both of these patterns, though the bright pink neckline was tested last week. Now, the market had formed a larger late January to mid-June, quite long bearish halfway hesitation that triggered lower in mid-May. Now, we already reached the primary target below and came quite close to the secondary harder to reach target X below, down at 230.30, which sits on top of a significant congestion zone between 216.25 to 230.10. However, 2 weeks ago the congestion below proved to be too strong and prices rejected it. And last week I retired this harder to find secondary target. That's why you won't find it on the bottom of my chart at the moment. The market's push higher went through various highs, as well as the 50% Fibonacci line of the June 20 to February 25 move at 262 even, to initially peak at the green declining short medium moving average 2 weeks ago, currently at 272.5. But then last week try up towards the 50% Fibonacci line of the January 23 to February 25 move at 286.10, capped in part by the declining mauve medium moving average, currently 281.05. However, I do not think this is the end of attempts higher, not only because the highs have been higher, as have the lows, but because there might be a new pattern building up. It's a mid-May to date possible small reverse head and shoulders pattern, with a highlighted in bright green neckline, currently 280.95, which ties in with the bright pink and dark blue necklines, as well as the nearby 50% Fibonacci lines. All in all, quite a few patterns have their key levels right now in between 280.95 and 286.40, which is quite a narrow range and makes me cautious and also suspicious. This latest reverse head and shoulder pattern has not been triggered as yet, but it is usually seen as a bullish pattern, though bearish continuation patterns do exist, so caution. But be aware of the possibility of further attempts higher. Now, there's something else I'd like once again to look at here, and for this I'm indebted to Ray Bradbury for asking me about New York coffee 64 weeks ago. So I went at the time to my longer term charts, the monthly charts, where we can see some interesting insights. You see, on my monthly longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025. It was a multi-year 2012 to 2024 very large reverse head and shoulders bottom, for bright red neckline on my chart, my monthly chart, currently at 279.15. The break higher over this neckline reached its primary target on the upside and just about reached its harder to achieve secondary target. Then the market turned lower, and over the course of 2025 and now into 2026 has formed a very, very, very large double top pattern, an Adam and Adam double top, based on that bright red neckline. Now, the market had breached and broken below this bright red neckline. I felt obliged 3 weeks ago to lay out some targets below for this really, really, really long-term pattern. Thus, the primary target X will be down in the 184.90 zone, amongst the congestion of 2023 and early 2024. And the 2020 to date uptrend, currently at 184.5, with a secondary harder to reach, much harder to reach target X1, down in the 132 even zone, on top of the congestion from late last decade and the start of the 2000s, plus the shallower 2019 to date uptrend, currently at 131.85. Please bear in mind these are long-term, possibly very, very long-term targets below for this double top pattern. However, we are today once again moving up towards the bright red neckline, indicating a lack of stabilization under this neckline. Hence, Caution, in case this may all be a false break, admittedly a big break, but still possibly a false break on the downside. Especially as we look with just tomorrow left for June to be a reactionary, bullish monthly harami, and we could be closing right on that bright red neckline, and I wouldn't like that very much at all. London coffee. 55 weeks ago, so a year ago, I said of the bearish pressure on this market, and I quote, "They now have the overhang of the market from roughly 5,300 up to this year's high at 58.49, sitting above." End of quote. And this overhang of bearish pressure and ammunition was important, as it started back then to press down, magnifying the subsequent breaks lower. The main overhead resistance since then has been the dark blue February 25 to date downtrend, currently at 36.35. It was tested as recently as the last 2 weeks and has held pretty well, as it still remains the main overhead resistance. This downtrend had enough of an impact on me back then that I drew a parallel bright red channel based around it, and that's currently 28.82 to 38.19. We are today sitting comfortably well within this bright red bear channel, if towards the upper end of it. So if all these moves lower, what now? Well, I said 19 weeks ago, and I quote, "We might take a leaf from New York Coffee's book and look at the last 3 weeks' actions as a possible descending small scallop pattern." End of quote. This seemed the likely case back then, and I went as far 19 weeks ago, laying out a primary target down in the 34.15 zone, with a secondary, much harder to reach target X1, down in the 30.04 zone. I added at the time, and I quote, "We'll now see over the coming weeks if this vicarious analysis from New York Coffee works here." End of quote. 17 weeks ago, we reached target X down at 34.15, and 14 weeks ago, powered down through it, gradually heading down towards the lows we saw last in July last year. Even now, despite the move up over the last 3 weeks, I am still somewhat optimistic of reaching the harder secondary target X1. The main obstacle, I think, is the low in April this year, which was caused by that July 2025 low at 31.60. Watch this level carefully, as we've had 2 attempts lower, and I am starting to wonder if we will have a third. I'll speak on this shortly, but first, back in February, we started to create a small early February to late March bright pink bear channel, which has morphed into an early February, still bright pink, descending expanding wedge pattern, currently 28.82 to 35.65. In early April, prices breached this pattern on the downside, but were stopped from heading lower by the bright red lower bull channel line, and the breach was repaired. Over the last 2 and a bit weeks, the pattern was breached on the upside, but was stopped by the previously mentioned dark blue downtrend, and prices once again below the bright pink upper trend line, if only just. And seemingly supported actually by the 50% Fibonacci line of the March 20 to February 25 move at 34.81. In the process of this toing and froing, we might just be forming a possible quite small double top over the last 2 weeks, with potential down to the low 3300s. So for now, the bright pink pattern is still good, though somewhat unreliable. One final point, and it's becoming somewhat of a key factor as we approach the end of this month, is that we are now set up to make a monthly key reversal here for June. Thus, tomorrow night, we either close over 33.61 or under 33.47, then we would be on with a monthly key reversal. Anything in between, and we'll have a lesser outside month. Right now, we're looking at a monthly key reversal up, and that is something to consider. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.